Most investors still think of wellness as simply a beauty and lifestyle industry. But today, the lack of wellness is becoming a systemic risk for economies, companies, and capital. Up to 70% of adults in developed countries live in a state of chronic stress. More than 30% regularly don't get enough sleep. This means that a huge portion of the global workforce is functioning below their true potential every day. When this happens on a large scale, productivity declines, quality of decisions decreases, and the cost of errors increases. At that moment, wellness stops being a personal choice and becomes infrastructure. And when something becomes infrastructure, capital begins to reorganize around it. In this video, we'll break down why, after 2020, wellness stopped being a luxury, how it transformed into an economic function, and why the largest investors and funds are starting to view wellness and biohacking as part of the infrastructure of the future. This is important for anyone thinking about capital on a 50-year horizon and wanting to understand where money is truly flowing. According to the World Health Organization, stress and depression cost the global economy more than $1 trillion each year due to lost productivity. McKinsey notes that employee burnout has become one of the key risks to companies' long-term performance and efficiency. When millions of people operate in a state of exhaustion, innovation slows down, and overall business efficiency drops. This is no longer a conversation about self-care or spa. It's a systemic issue that directly affects long-term economic growth. When human performance declines, entire systems become fragile. Companies make weaker decisions, teams burn out faster, real estate without a recovery-oriented environment becomes obsolete faster. Workspaces that ignore human biorhythms reduce productivity. As a result, assets begin to lose value, not because of market conditions, but because they no longer support human performance. That's exactly why wellness is beginning to be perceived as infrastructure. Infrastructure always sustains life and productivity at scale. Power grids sustain industry, transportation sustains movement, and digital networks sustain coordination. Today, wellness is beginning to serve the same function. Sleep quality, recovery, mental clarity, and metabolic health directly influence how long a person can work effectively, how well they make decisions, and how resilient systems remain under pressure. That's why wellness is no longer layered on top of an environment. It is embedded into it, into residential projects, offices, hotels, and urban spaces. Capital reacts to shifts in risk. According to the Global Wellness Institute, the global wellness economy already exceeds $5 trillion. Singapore is building ecosystems around preventive health and biotechnology. Developers are integrating recovery, sports, and circadian design into next-generation projects. This is not happening because wellness became trendy. It's happening because systems now demand resilience. And the key question for investors today sounds different. Will this asset be able to sustain human performance 10 years from now? When wellness becomes infrastructure, it stops being optional. And when something stops being optional, capital doesn't ignore it. It reorganizes around it. In the next videos, we'll break down how the investment model has been shifting since 2020, why capital is increasingly flowing into wellness, biohacking, and human performance infrastructure, and which assets are likely to grow over the next 5 to 10 years. Subscribe to the channel. Here we analyze global investment trends and the future of capital.